Hi, Jayanth. Good to see you back.
Hi,
Welcome.
Leslie. Totally. I mean, the feeling is mutual, man. Good to see you again.
And we also have with us Debashish Bose. He's partner public markets at Oaks Asset Management. The firm was set up in 2015 and focused on investing in homegrown consumer startups and mid-sized companies. It now has become an independent asset manager that also invests across sectors on the public side. So welcome to the AI Rising podcast, Debashish. Good to have you.
Thanks, Leslie.
Yeah, and good to see you, Debashish. I mean, we've known each other good 10 years now, since 2013, since your Quant Capital days.
Yeah, possibly a little more. Yeah, you're right.
Yeah.
Been a while.
Been a while.
Yeah. And for our listeners, I think the reason for having Debashish here, other than him being a friend also, is that, investors have been traditionally exploring data mining to map performance, market sentiment, identify trends, for equity investment. And of course, AI has been used, for instance, in helping in automating investment screening, due diligence, data analysis, predictive modeling, optimizing exit strategies, etc. And then Debashish will tell us more about that. But with generative AI, the bar has only been raised since Gen AI, or AI 2.0, as Jayanth and me like to call it, holds the promise of enhancing, decision making, boosting efficiency, and optimizing operations for PE portfolio companies. Debashish, generally, before we, talk about, getting into the meat of the topic, we typically talk about any news tidbit related to generative AI that would make sense or has sort of excited you. You're a guest today, so anything in particular on ChatGPT that sort of caught your attention?
I think it's been a few things, Leslie. And more importantly, I'd say reactions from a few people who earlier had been skeptical about the effectiveness of AI. Not that they've necessarily gone over completely to the other side or anything of that sort, but saying that, okay, look, this is something different and we've got to take this a lot more seriously. How it pans out, what use cases, I think that's always been an issue. And I think Jayanth and we were chatting the other day, and while version 1.0 was a lot about just showing off fancy tools, but not a whole lot of thought around actual end usage. And that's where I used to find the biggest sort of gap. And I think where version 2 is coming from is almost like, let's figure out the use case and then kind of figure out how to use it. Like it's almost like domain first, and then let's see how to, put it to work. And I think that's probably set off reactions from a few different people, who you would take a little more seriously than the folks who are purely doing the PR hit jobs on, AI this and AI that. And I think that's what caught my attention. I think maybe one example would be probably the Kailash, who's the CTO at Zerodha. I think he put out a pretty nice article on, and I say this because Kailash and I have actually spoken about this in the past. We've been in touch, Leslie, even at the time when we talked about that AI-driven portfolio we were managing when I was at IDFC, and a lot of those discussions happened at that time. And I think seeing his reaction to me, and look, he's not the person who's actually investing. He's actually a nuts and bolts use case guy. Where can I use this? Where can I use that? And when that was coming from that kind of a source, to me, it was saying, okay, look, this has to be taken seriously for what it is, which is a productivity enhancement mechanism. And then it's up to us, what do we make the best of it? And then, Jayanth always comes up with what's happening and how to. So I take that a little more seriously again than the PR hit jobs.
Yeah. That's true. And a lot of AI washing, and as I recently wrote about, I won't mention the company again since I've already put it up on LinkedIn. So a lot of AGI washing also of late.
Yes.
So yes. I think we can clearly, these are distractions at this point in time. I think it's because unless it's pursuing a business case, there's no point in really talking about these things. Jayanth, any particular news item that caught your attention this week?
In terms of outside of the financial
outside, not necessarily,
asset management industry, definitely two things. as to, how fast this entire LLM space is growing. I mean, last week alone, in the last week of uh, August and first week of September, 4,000 LLMs have been outsourced. I mean, put in open source, not outsourced, put out in open source. This is the speed at which the LLMs are, innovation in that area and domain has been growing. And incidentally, a week before that, Spain became the very first country to, to put a supervisory committee to oversee the regulations and the regulatory environment of AI under the UAI Act, right? I mean, we know different countries around the world are working on their AI regulations and acts, but Spain becomes the first country to actually, appoint a committee to do the, for the supervisory role for regulating AI. So these are the two things that, came across. One, on one side, the innovation is growing at an extremely rapid pace, and on the other side, regulators are trying to see what they can do. So these are the two main news items that caught my attention in the last week. Yes.
No, I'm glad you brought up both these points, because in the first point, I think Debashish just pointed out about Zerodha, Kailash Nath. And Kailash Nath is everybody knows that he's associated with FOSS also. So as far as open
Correct.
source is concerned, and he speaks a lot on open source AI also. So that should warm the cockles of his heart. And as far as the second point on the regulatory part of it, I think a lot of big tech leaders congregating in India also, even as we speak, and some of them are very
Correct.
much
As a part
there.
of G20,
Yeah,
yes.
as part of the G20.
Although with this whole regulation thing, I mean, it's a real Pandora's box, right? Because LLM also is data capture. But
Yes.
how
Yeah.
that whole territorial battle, so to speak, works out, and which kind of has implications. And I mean, I don't even know how it truly plays out, but implications, even when you look at big tech, simply because you mentioned it, because hitherto, big tech was a lot about each doing their own
Correct.
domains and not really
Correct.
stepping on the other person's territory and running this cushy oligopoly between them.
Yeah.
But it may almost, LLM development may almost necessitate them to basically step over each other
No,
in
that's a
the
very, very important point that you brought up, because there are two class action suits were being
Yeah.
filed
On
against,
OpenAI.
against OpenAI, and then I think there are some other class action suits against Stable Diffusion and Midjourney also.
That's right.
So in the first case, I think it's these authors have said that you have plagiarized our text because you have taken, and of course it gets into the whole area of copyright violations and all that. It's more specific to the US copyright violation, but I guess it will be a global, it will sort of become viral after some point in time, and it have a cascading effect as far as the globe is concerned. So yeah, very, very important points.
And which kind of, well, slightly unrelated to this, I mean, governments all over the world are also grappling with how to finance all the splurging which has been on. Whether it's taking care of debt and to, roll over that debt and to sort of get over it, trying to do all this supply chain restructurings all around the world and so on and so forth. And some version of data payment, pay to use, whatever variant of that it ends up being, I think will have to come sooner or later for somebody to pay this bill. Because beyond the point, I don't think individual taxpayers can also keep paying. I mean, they're already pretty maxed out across countries. So big tech or whoever wants to make use of all the free videos and everything they're getting right now, how do they pay for it? And which then, what consequences does that happen on the business model, which so far has always been free input, free data, do what you want, and then sell services on top of it. So I think just starting from that regulatory landscape to geopolitical, whatever the political landscape to even geopolitics for that matter, and then crossing over to technology and control. I think and as Jen puts it, we suddenly are going all this decentralized with all this LLM with
Right. With
so
the
many
open
people
source.
launching their own
Yeah.
open source on it.
And Debashish, it's very interesting you bring that up, right? Because we've had a lot of conversations, and you've been a public markets focused investor and portfolio manager for some of the investment funds, and you've been following, and a lot of conversations we've had also revolved around macros, and you're pretty darn good amongst the people that I know who looks at macros, the movements at the macros, and their impact on the markets. Okay, in that sense, how do you see this inflection point of AI as a macro and its impact on markets, along with various geopolitical, and climatic and economic scenarios that we are witnessing around the world? It's purely from a tech space. Is this a big enough to to be one of the macros to impact markets?
I think the only answer I can give you for this is that classic hitchhiker's guideline. The answer to everything is 42. So, no, look, I mean, I don't even know where to begin with that question. And I'll just take a very micro example and sort of try to get to what you just hinted at. I mean, I know the question was macro, but I'll just take micro for the point that, look, whatever, let's say they're trying to do with this GPT Copilot, which Microsoft was planning to bring about, and therefore bring all this workplace productivity and so on. Now we'll see what the reality of that is, but let's take it for what they are advertising it as. Where effectively it's sort of telling you what to answer in an email or putting together your little report. I mean, even Zoom does a pretty good job of putting a report together, let's say of this conversation. But let's say putting together that report or that presentation or the right answers to be given and so on and so forth, and then taking it to that next level where basically it becomes a more professional and flexible pivot table, which is able to tell you that, okay, these are the vectors and this is the potential, data analysis and way forward. Which, if you now start building layers on top of it, ultimately results in saying that why do we even need a CEO, right? I mean, because all levels of decision at some level or the other can be taken by someone or the other.
Leslie and I have had this conversation. Yes.
Now, the reality is still humans still have some control. I don't think that's changing. I mean, I don't think the CEO is going away, because the need for that is completely different from the need for productivity enhancement translates into higher pay packages for people further up the food chain.
I think only the shareholders will be happy to hear this. The CEO compensation goes away.
No, that's not happening. I don't think that's happening. I think it'll be the minions below whose compensation. I think that is far more likely to happen. So, but to the point, I think you can't take away the issue of control, basically, over a potentially powerful tool, decision-making tool, decision justification tool, call it what you will. Right? I mean, both are equally important. So the same thing now, if you take it up to industrial scale, country level, or regional level, and so on and so forth, the same applies, right? I mean, who's going to be controlling these decisions? And again, let me give another example of this. I mean, of course, I'm taking it from the financial markets, but it's kind of relevant in some ways. Like, look, everybody set up a central bank to do whatever they do, right? I mean, no one truly knows what they truly do, but whatever they do. The fact of the matter, however, is if the dollar is the global reserve currency for all intents and purposes, then the only central bank which truly matters is the Fed, because they control the price of the dollar and the quantity of the dollar which is available, which is the price of money and the quantity of money. And price of money and quantity of money are the only determinants to everything transactional, at least. So in that context, it's really that, right? Now, if we have gone up from Midgard and reached Asgard and all of that, where money doesn't matter anymore, and we're at that point where feelings are currency and whatever it might be, philosophy is currency and so on and so forth, who controls that? And because there's always going to be currency, right? It's just that the form of it may change, because currency, power are sort of almost two sides of the same equation. So who controls that? And again, you take it back to a micro level, nudging has always been part of what AI 1 was all about, right? Nudging you to do this, nudging you to do that. So you take it again back up. I mean, it just comes back to exactly the same point. I think this territorial battle for controlling who will be able to be the biggest influencer, for want of a better word, you can then take it further into hardcore philosophy and say maybe the whole world itself is AI driven anyway to start with. So,
but Debashish,
yeah.
For the benefit of our listeners who will be very keen to understand how you're using AI ML, say in Oaks Asset Management, and also for your portfolio clients, whether you're trying to combine all those kind of data assets, because you're sitting on such a humongous amounts of data, which can make tremendous amount of sense, regardless of whether you're using AI 1.0 or 2.0. I just want to understand, the transition kind of from the traditional way of using AI, machine learning, basically, and now what's happening with the entire power of the transformers behind machine learning, the generative AI movement that we're seeing now.
Sure. So I think in a nutshell, we are not necessarily using it much for the investing side. I mean, while we do have some models which we keep running from time to time, and I would say they are mostly still version 1 models, simply because, I don't even know how to exactly use generative AI for pure investing. But what we use it for is essentially to figure out what others will do, and what we've built our portfolio around is what the models will not show. And why is doing that is that I just think everything in the world is in some sort of transition, especially post-COVID, where if you're basically saying that we want to reset supply chains and we want to go about energy transition, now whether it is because of climate and this and resiliency, whatever the reasons are, we want to do this. Now, energy equal to oil for the most part, and supply chains equal to China produced goods for the most part. Now, both of these were priced effectively in dollars, because the Middle East was pegged to the dollar, the Middle East currencies were pegged to the dollar, the yuan effectively pegged to the dollar, which means these are actually the bedrock of the reserve currency itself. Now, if you start changing that, you essentially change the bedrock of the reserve currency. Now, once you change that, then how do you price money? How do you even, what is money itself? All of those questions come up. And obviously all this work around the crypto space, the digital currency space, all of these things are going on, the NFTs, all of that is on, which is all sort of, building blocks towards where we're kind of going. But when you're making such fundamental changes in the way we will even consider what is investing, price of investing, what is money, price of money, all of that, I don't even know what AI model should I even use, right? So we're not necessarily trying to use a whole lot of that. What we're just trying to use it for is what the rest of the world will do and how can we be one step ahead. That's what we're using it for. The second side, however, which is more intriguing, is the use cases on the business side of it, which is, how do I manage my content? How do I work with partners in the chain, whether it's the distribution folks or even, sales folks within our firm and so on, so that we can have the targeted engagement that we want to have. Look, every firm, irrespective of its field, will have a certain set of target customers and a certain way in which it wants to engage with the customer. Now, there could be any number. I mean, it could be 5-minute engagements, it could be periodic engagements, it could be long engagements with long pauses in between. There could be many ways. It could be highly intellectual, it could be highly feeling oriented, whatever the use cases might be. So we're trying to figure out what is it that how we manage money, and therefore what engagement methodology works best for us, which means what kind of content and what kind of tools does the representative of ours needs to be equipped with to be out there doing that customer engagement. And I think that's where this whole, between your, whether it's ChatGPT or various LLM models you refer to, Mid Journey itself, I think it just opens up a whole new range of opportunities, which we are, I think, only scratching the surface right now. We're nowhere close to even figuring out what truly it will be. I mean, I can try and visualize it, but visual to,
Yeah,
uh,
it's a very
it's a
challenging
massive,
task.
massive, yes.
Yeah,
Correct.
But I
but
think
then
that's where our bigger focus is.
I just had a follow-up. What about analyst reports, Debashish? I mean, I have a friend from Bombay in the investment industry, a career guy in the investment industry. As soon as ChatGPT was launched, he was told by his boss in the fund that, use ChatGPT for developing your reports that you send out to your, customers, institutional and otherwise. In my industry, research and consulting, I know that, a whole lot of research, assimilation, summarization, and even, some kind of analyst report generation is being now offloaded to generative AI. In your space, in investing, asset management, investment funds, do you see some part of analyst reports going on to the generative AI space?
But I'll give you a slightly blasphemous answer. I don't even look at reports.
oh, we love that.
Even
Oh,
though I
wow.
used to peddle that while back in the
Thank
day.
you. Yeah. Thank you. You
And
just made my job a whole lot easier.
no, and I'll tell you the reason for that. I mean, I mean, we're a bit of an outlier on this. Many people do rely on all that,
Right.
but we don't simply because of few very simple reason. When you're basically, even when you're running any model and you have time series within it, your time series need to coincide.
Right.
Now, my time series and the analyst time series, there is no chance it'll ever coincide. I may be investing around 10 years, he may be investing around 10
Yeah.
days, or rather
Yeah.
predicting around 10 days. So it just makes no sense. But that's
In
just
your particular case, you mean in the
yes,
case of Oaks. Understood.
yes.
Understood. Because
What it
your investment timeline is long term in in
long term,
nature.
and therefore,
In nature.
most of the things they're talking about is not so relevant as far as we're concerned. We're really investing into what people cannot know. They can only have a vague idea of it, but what they cannot know. Because as soon as you get into the realm of what you cannot know, everything's the same. There is no information edge. It's only your comprehension and all of that which matters. Whereas when you're dealing with where these guys are dealing with, which is data points and what's already
Right.
out there and so on and so forth, I think that part has already been taken up by the giant citadel type of funds of the world who are able to put the infrastructure, the tech hardware infrastructure and the scientific mind infrastructure
Right.
to be able to program and sort of react faster in those high frequency data series.
Understood. The tech and
And
intellectual capital essentially,
yes,
again, to your earlier point, is still getting lopsided, concentrated in one corner, kind of
yes,
getting
but
monopolized here.
that however doesn't mean that these models will not have massive use cases in actually looking through data and compartmentalizing it into different pieces of, say, organized information which I can use. I mean, even if it means, okay, I just want to look at, say, a set of companies which are in the pipes business, but each of them may be a small part of an overall business of a particular company. Right. So let me just look across the board, be able to take that information out, plug it into a particular place, evaluate it versus, say, the size of the industry, so on and so forth. So those kind of information, I think there's a lot of that which can be done, which is a combination of, I think, understanding of the industry metrics itself and the creativity which you put to work. And I think what you were mentioning the other day, the barrier to entry, which was how do you code it once you have even figured out what you want to do, might be just breaking down.
Correct.
And that I think is a use case. The other one, of course, is we're all in this business of sending reports to our clients about some opinion on the markets and so forth. I think that written part is anyway on the way out, because I don't even know who even reads on. So
he's coming for your job as well, Leslie.
Yeah.
I in one master stroke, he has done away with analysts, he's done away with the media. Okay, bye, Debashish. I think we've had this conversation. I mean, this is amazing. But so Debashish, that means your task has become very, very challenging now when you're investing in your companies across sectors. Now, we are hearing a lot. I mean, everybody, like, right, all the big four consulting firms, and anybody for that matter of fact says that you have to, have to be an AI first company. Only then will you survive. Now
I
you
think we
are
need to ask them, what do they even mean by that?
exactly. So I wanted to understand from you on how do you base your investment decisions given the kind of, what would I say, barrage of AI information that is being thrown at us.
Not read it.
Yeah, he looks for signal in the noise. Yeah, not read it. That's a good answer. He
No,
looks
but
for
I'm
signal
sure
in the noise. Yeah.
you're discussing it with your friends. You're discussing it with your, I mean, there could be pressure from some of your peers also. I mean, I'm
No,
just
I think
trying to
no.
understand the psyche.
I think it's a very good question, and I probably would have been far more deer in a headlight situation had I not spent several years before this trying to actually understand how AI even works. Right? It's not so much about the code or not the code. I mean, that is, as Chandra was saying, that may not even matter anymore.
Yeah.
So having some understanding of what is it that they're looking at in these models and how they're able to throw it at least at a theoretical level, and then seeing it live at a portfolio level, it kind of gave me a sense of where what is possible and what is not. Now, in our business, of course, one issue is that we are also liable to others for how we're managing money. I mean, we're answerable for it. So I can't take decisions without having a reason for it. So just correlation equal to causation, I mean, while it may very well be true, it's not, necessary and sufficient for the application itself. But that's a different, point aside. I think how we try to go about it, like I mentioned, is, in a world in this kind of transition, we simply try to see that, okay, which are the areas where folks are still sitting with the rear view mirror, and which are the areas which could change, but people are simply not allocated to it. Because that's what comes out of, investing into things you can't quite know today, which will by default mean people may not quite know what to allocate, how much to allocate, and so on and so forth. Now, thankfully enough, we are in a country where we're not exactly on the cutting edge of anything really. I mean, we're still very much an emerging, developing country. And of course, we may go faster than a lot of others. And possibly a lot of that may have to do with what the team is up to with India Stack and so on. But I think the basic stuff of what is happening in the physical world, at least for now, are stories which have been done in other markets. So for the moment, we're doing the simple thing of just trying to see what happened in other markets. Are people already invested in those things over here because similar policies are being followed over here, and just going around investing in them. I think the real use cases may be less in investing, and it may be, like I said, I mean, for us, it may be more around business building, but I think a lot more of that comes out more on the credit side. I think let me get to the endpoint first and then try and explain it. I think what will get created out of the broader ambit of India Stack and all the pieces they have under it is a peer-to-peer digital barter ecosystem across industries, which is probably the final this thing, but that may be a good 7, 8, 9 years away before we get there. But I think all the building blocks for it are coming up one by one, starting with what was, just having the digital ID and the digital payments, which is just the way to recognize and be able to send money, of course, around. But then what is going on now with the account aggregator framework, where you're essentially getting all that financial related data or even personal related data, tax related data in one place. And from there, you're trying to figure out whether the person is credit worthy or not. And this person may not even have been banked earlier, new to financial inclusion, a small enterprise, or anybody in any part of the country. So all of that getting captured in one place, and then service providers coming on top of it and being able to run the algorithms, because human nature doesn't change all that much, or company natures don't change so much. So predictive algorithms, I think, will work pretty well there for the most part. And even simple version 1 algorithms may work well. I mean, whatever they lay on top of it, maybe even better, and that we'll see how they work with it. And then from that on to the marketplace, where I think ONDC and the likes will create the marketplace, but then you'll have trust protocols come in, whether it's blockchain, whether it's something else gets developed. I don't. You were mentioning the other day, I think, about LLM certifications almost, right? Truth
Yeah,
certification
true GPT, true
through
GPT.
GPT
Yeah,
on
LLM
that,
certificate.
and
Exactly.
that may well, leapfrog blockchains itself,
Yeah.
and get to. So we'll see how all of these things shape up, and then how all of this gets put into a box, which is also under the supervision, because control can't be let go while still the animal spirits are all out there. So whether that happens through central bank digital currencies and the sort of incentivizations, nudges they're able to create based on the pilot projects, for instance, they're doing today. Essentially, it's a whole lot of usage behavior data capture, which the RBI itself is up to today. I mean, just that news came out, I think 2 days back, where they said that they'll allow a credit line on UPI. I don't know if you caught that or not.
Yeah,
Yeah.
yeah, yeah.
Yeah.
So, which is interesting. You're sort of taking it away from the walled garden of the bank or the CIBIL or whoever, and
Exactly.
into like an open domain.
That was the
Where,
value proposition of most of the fintech companies on the India stack any which ways. They were all building the credit rating algorithms for the last person, for the billionth Indian. So that was going to get there. In fact, it's very interesting you mentioned that about 20-25 years ago, Bill Gates said that banking, banks might or might not remain, but banking will remain. Okay, and
And
when the
this is what
technology.
Amitabh Kant used to keeps on
Correct.
reiterating at every
When,
forum.
exactly, for India stack discussion, right, or UPI discussion. So when the technology and the regulatory environment were in place, we've seen in the last 5-6 years that that gave birth to the whole neo banks, digital banks, in the banking industry. And now with Apple, in partnership with Goldman Sachs, whatever they're doing, I mean, you can say that it's because of the interest rate that they're giving, but they managed to, garner the most number of savings account and most number of clients and customers. So we are seeing probably the first entry of a technology player into the banking industry, right? And I remember in the early days, the Netflix CEO said that we have to become HBO before HBO becomes us, right? So again, a technology first company in the media industry, going ahead, and today Netflix and HBO in terms of media content production more or less are the same, and distribution is what is actually playing the big role, a big difference actually. Now in the investment, wealth management and asset management phase, the space, the AI 1.0, right? I mean, you were involved. For our readers, for our listeners, Debashish was the core team member of India's first AI-based investment fund, which is IDFC Neo, and he was working on it back in 2017. Okay, and initially, AI in the investment space was primarily being used for portfolio optimization, strategy formulation to some extent. Okay, a whole lot of data analysis and pattern recognition, obviously, but stock picking as well. And you designed a system, one of India's first system to do that, right? But then the COVID years, showed that all the quants, okay, because the markets did not follow any patterns, right? So human investors actually made more money than the quants, right? So the pattern sort of broke there. But you also invest with an extremely forward-looking long-term view. So 10 years from now, do you see in the asset management space a technology company or a technology first company coming and becoming a big player in the investment and asset management space with AI at the forefront?
yeah, definitely. I think definitely. So, I mean, if I just take that thought forward of the digital barter ecosystem, so to speak, because what I
Right.
was getting at is, when you put in all these building blocks, data, credit appraisal, credit disbursement, marketplace, you're essentially putting the building blocks of a digital economy over there. And then you have a trust protocol, sort of, which is basically a trust mechanism, right? And you have some sort of traceable currency, whether it's from the central bank or it's whatever it is. So when you put all that together, essentially you create an entire digital only economy, right? And that's when your Zeptos and whatever of the world also start making sense, because you're basically doing, transaction, settlement, all of that like
Right.
happening together. You can go into the world of quantum this thing also, and maybe at some point when we have mastered energy mass transitions, we can pretty much, send waves of goods down and convert it into particles at our end. I mean, some
Wow.
advanced version of 3D, but that's some way off. So we
I told
won't.
you his meta.
Yeah,
Exactly.
I was thinking always, the stretch of the imagination kind of stuff. I said it's pretty
Yeah.
good.
Yeah, but I would say it's still the more financial aspects of it, I think, are pretty much now within a 5-year window. We're not really talking that far out. And I think when you set all that up, it's in some ways just, a lot of us come from communities. I mean, not us because Bengalis didn't do anything in finance, but many other communities come from, the traditional money lending type of thing, whether it was the Marwari community, many parts of the, the Andhra community also have been in that business. So, which was a lot about, trust and lending to people and sort of within that thing. Now, that same thing being applied at population scale
Right.
is exactly where it goes to why do you need that bank as the intermediary in between if there's a whole lot of people providing that information, like what a stock market does today, and effectively democratize that whole thing, and so that people can directly invest or choose a fund, or the funds even become index funds and whatever. Now you can have multiple use cases of that at a very, very simple level. I mean, I'll just give one example to highlight it, and then you can take it from there, which is that let's say we have a big problem with fertilizers in terms of, it's a necessary product, but the political this thing and compulsions and all of that ensures that there needs to be a big subsidy on it,
Right.
and we also
Right.
import a large amount of it. And the way the mechanism works is that the farmer can basically afford to pay only once. And the government will compensate the company only once. So the
Right.
company is pretty much out of working capital for like a good 6-8 months. So they have no money to go actually invest in capacity because they're just funding working capital. That's just the fundamental break in it. And therefore, we're importing fertilizers. So whenever a crazy situation happens geopolitically, we're just stuck and we have a
Right.
huge bill to pay. You have ways to solve for it in various ways, but let's just assume that we have CBDCs which have come in, central bank digital currencies which have come in, and one use case is defined as one CBDC unit equal to one bag of fertilizers. Now you run your sorting algorithm, pick up whoever's below the poverty line, or at least appears to be, and give them one token each directly into their wallets. Now that person can choose, then that token is redeemable against a bag of fertilizers. Now he can choose whether he wants to redeem an actual bag of fertilizers and do agriculture with it. But you've also simultaneously allowed fertilizer prices to float freely now. You don't need to do the subsidy anymore because you've already disbursed the subsidy.
Right.
So you let it float freely. Now the person can choose, do I even bother doing agriculture, or now do I, simply go ahead and sell that token in the market because it will reflect the price of the fertilizer. So now it starts behaving like a commodity at the very least. It could even start behaving like a stock if, there's some shortages and all those things happen. The other side also is you can take that token and go to a bank and say, lend me money against this, or go to any lender really, not even a bank, and give me money against this because I can always redeem it for a bag of fertilizer, which always has some collateral value. So now you've created a bond market out of this use case. So you can literally create a lot of things out of a basic need. So I think finance translates over a period of time from this esoteric random companies we're all trying to pick, which nobody has an idea what they're trying to do also, to one which is fairly basic to our daily needs or our daily wants, and then have a broader bartering ecosystem around it. So I'm trading holidays in Europe for bags of rice, whatever it might be, So, and look, if AI is going to make sure a lot of us don't really have real work to do, I think it's a great thing to keep people engaged doing all this.
I can give you a real world example of something similar happening in the startup funding and startup grant space in EU. Okay. And it's actually happening as we speak. So it's very close.
Yeah, but I think the interesting take home from this is whenever you speak to people like Debashish and Of course, a lot of people in the finance sector. I know Debashish has managed to broaden the entire topic to go far beyond AI. But I think the take home is very clear that AI is a means to an end and not an end in itself. I mean, it's pretty naive and stupid, I think that's the reason why this hype is, getting on everybody's nerves, saying that why are we because it is business as usual for everything, and they're using we used to use AI earlier. Now we're using generative AI, regardless of whether we're using the foundational models, LLMs, etc., and enhancing our business propositions. But the proposition remains the same: using AI to enhance your business. If that is not happening, then it's a pointless exercise. Debashish, my question to you is now moving from the finance world, where I think you very, very aptly brought out the point of the digital public goods, how machine learning, AI, basically the foundation of that. Just for the benefit of our readers, ONDC, for instance, uses the Beacon protocol, which is open sourced. So if anybody wants to, read up more, there's a whole, the website will give a lot of information. It's a brilliant homegrown protocol that is, I mean, people are, of course, comparing it to the TCP/IP, and I think, well, those kind of comparisons at this point in time, according to me, are odious. But yes, it's a very, very potent kind of protocol, which is worth getting into. Having said that, Debashish, what are your thoughts on? Let's remove your investment, partner hat at this point in time, and just from a philosophical point of view, where do you see this entire AI 2.0, which includes foundational models, the LLM, shaping the world that we live in?
No, I think it's something we touched upon a little while back. I think a lot of it is now going to move from the glorified regression models to, I think, something where people actually try to craft it to their use case. Now, whether your use case is to create a video, it is to create content, is it to create a report, is it to, various versions of productivity enhancement, or is it to actually go out there and create something new altogether, and so on and so forth. We're just sort of, like I said, just scratching the surface of that part. And all of these models, I think, to try and take a very definitive view of what they can create is too early to say, because they simply keep improving as you add more. We'll have to see how the fight for data control and all that plays out. But it's a broader move towards collective intelligence. Now, let's bring in a few different angles to this, which is what we are discussing is still broadly what humans will do, which is, using it to whatever the use case might be in my particular profession to potentially enhance my productivity. Let's put it that way. But there'll be another version of it, which machines powered by 5G, 6G, whatever G, are able to talk to each other and effectively move up the realm of their own sophistication. Now, this doesn't necessarily mean they're becoming some AGI machines.
Yeah, I was about to ask you. Now you're getting into that area of sentient AI.
Not yet. I don't think that's truly possible till we get to quantum based systems.
Quantum computers.
I don't think in binary systems it's possible. But they can definitely, I mean, if you're already running, let's say at an industrial level, you're able to run these, fault detection systems, and they're able to replace and, whatever, at least point it out or flag it out. I think that next step of, faults, finding rectifications, call it large machine language running models, or more importantly, even different machines being able to talk to each other. I think that's a fairly complicated use case to even solve for. I mean, everyone builds it as per their own protocols. And I think the beauty of, I'm sort of digressing a bit, but the beauty of what they've done with India Stack is just getting different pieces in a disparate country like India to talk to each other
talk to each other at population scale.
At population scale.
At population scale,
So I think that same situation being solved for in machines. I mean, I think from your own field, and you'll know a lot more about this, Jayanth, that whole, that Open RAN on the telecom side, and where it's going to.
Correct.
I think this is just probably the first use case
Exactly.
for things like that. But just take a very simple, real world use case. I mean, just look at OTT, right? I mean, you've got different providers giving completely different experiences, different rendering, buffering speed, all of that. It's just so I think a lot of it is just having that ability of various machines to talk to each other and go up the curve, and sort of I think that will also be a big part of this decade.
No, in the last
I think
4 years,
I'll just. So I think we have not touched on the pitfalls of AI. I mean, especially because this is a highly regulated sector, the public markets, the whole finance space, etc. I think that's a given. I don't think any one of us is undermining that, but I think it's a little beyond the scope of this particular podcast. That's the only reason why we're not getting into it. Otherwise, that will sort of warrant another episode altogether. I just wanted you to give me the young budding entrepreneurs. We have, I think, how many startups? I've lost count of the startups. 100,000 startups in India. Out of them, deep tech startups would be about 10,000 plus.
Yeah.
So, what would a couple of pointers as to what the young entrepreneurs look out for when they are starting their companies?
That's a tough one. I think.
Is it? I thought that's second nature for you.
So not really. I think we're very old-fashioned that way. And while it's not exactly my side of the business, but what my partners do on the private equity side is actually they don't bet on young startups at all, as in young entrepreneurs at all. We actually go bet more on the 40-year-old plus people. For the simple reason you're operating in India, you sort of just have to deal with life here. And just having gone through the hard knocks of life just makes us think you're a little better equipped to the kind of things which are happening. We don't also actually do deep tech. So we just figure there's so many people.
No, my question wasn't specific given your portfolio. I know what you do with that
right.
Clearly. It was just like, okay, a youngster walks up to you and, because you're in the investment field and says, okay, your 2 bits of advice for me. That's what I want.
Yeah, no, I think for anyone, I would say that I think just focus on getting domain expertise first. Whatever your area might be, I mean, feel it out from a more personal level, what environment appeals to you. Once you figured that out, you will know what kind of role, job, industry you want to be in, gather enough domain expertise in it, because once you do that, then you're really able to figure out where the gaps are. You don't necessarily have to be the early mover every time. I mean, there could be opportunities, you could, crack it and all that, but then you've got to be ready also that early movement comes with its own set of challenges. And maybe at a certain point, you are also practical and pragmatic enough to go and sell it off when someone comes and takes it, and then be a second turn an entrepreneur and do something even bigger from it. But that's again, I think, more to do with the nature of the person than anything else. So I would just focus on that. I think just gather domain expertise first. And once you do that, because one doesn't need to look at it as, oh, you may even do a job just to do that. So the job is the means to an end. It's not necessarily, this is it and there's nothing else to life. And sort of take it from there, because that will, I think, give you a better sense of how to navigate the landscape.
Makes sense. Jayanth, final words?
No, nothing. I think this has been a great discussion. What Debashish was talking earlier, to answer your question, how does he see the future? I was going to say in the last 4 or 5 years, we've seen the death of the celebrity culture. COVID years did that, and the Instagram influencers and the content creators did that, and now AI is killing the influencers and the creators, right? And within 5 years, we've seen two domains actually getting killed. So that's how fast we are moving. But that's about it. This has been a great discussion. Debashish, thanks for your time. Thoroughly enjoyed the discussion as usual. Okay. And let's as always.
Yeah, but thanks, Debashish. I mean, because as a seasoned investor, you always come up with take off the blinds and you sort of put things in perspective, and that's extremely important because our listeners are, some of them are pretty young also, and they could get sort of starry-eyed about AI. So I don't think at any time, any point in time, that you dished AI. You just said, okay, fine, let's understand that there are plenty of other sectors also that are using AI. Generative AI just coming of age, and sometimes an early mover's advantage does not necessarily help. It takes time for technologies to mature, and they could entirely change your perspective. We have seen it, like ChatGPT, 100 million users last 6 months. Nobody spoke about generative AI till November 2022, and it has just disrupted.
Correct.
It wasn't with the works for almost 6-7 years, but it took so many, just last 6 months it has disrupted, and we are all talking about it.
And in 6 months,
Debashish,
that might get disrupted also, for all you know.
Exactly.
oh, you never know. I mean, yeah, I mean, it's better not to put your bets on any one thing. I think that's a lovely take home. Debashish, Jayanth, lovely to have you on the show. Jayanth, see you next
Thanks,
week.
Debashish. See you next week,
Thanks.
Leslie.
Bye.
Pleasure as
So,
Okay,
always,
man.
bye.
mate.
Thank you.
Bye.